Jai Hind kids, as I have given you the definition of accounting, remember I'll just read it for you. What is accounting? Accounting is an art of recording, classifying, summarizing in a significant manner and in terms of money, very clearly mentioned by me. Only and only recording of financial transactions which are a part or at least of financial nature of that particular year. Thus, to describe about, I would move ahead with the characteristic of it. Kids, through these characteristics, I will be teaching you both the things. How to create a mind map through the information as well as what are the characteristics of accounting. Can you see the characteristics have been mentioned by me very clearly. The first important characteristic over here is recording. Second is recording only financial transactions. Third, monetary terms. Fourth, classifying. Fifth, summarizing. And sixth will be interpretation. Okay, this would be your sixth one which I am unable to mention in this table, but when you make it in the notebook, it can be done. You can arrow it down and mention over here. Okay, the first important characteristic over here is recording. After reading the textbook, you will get a very wide paragraph in your textbook from which I have picked up the important point which is to be noted very clearly. What does recording means? Noting down the business transactions. If any transaction which is in relation to business, make a note of it. Recorded in a book which is called as journal. But when it is in relation to big firms, they have daily transactions. That time they prefer subsidiary book. Subsidiary book is a separate book for separate transaction. Means, for an example, to record all the purchase transaction, they will make a separate book called purchase book. To record all sales transaction, you will make a separate book called as sales book. To record cash transaction, you will make a separate book called as cash book. Cleared what is recording? Moving ahead, financial transactions. Very clear mentioned in the definition that any type of qualitative transactions are never included in accounts. We only have to mention quantitative terms. Records only those transactions which are financial in nature. It means it is measured in quantitative terms. You have to measure the given transactions properly in the quantitative terms. Now, how quantitative? That is monetary terms. All the transactions are recorded in the terms of money. For an example, purchase 2 kg of sugar. In this case, 2 kg is also quantity and rupees 100 is also quantity. But for me, the importance is this. Always recorded in terms of money. How did you expend? You remember the example of the pen I gave you? You buy a 10 rupee pen or a 100 rupee pen. You are very much important for recording that 10 rupees or 100 rupees. You brought in how much pen? Not interested. Moving ahead, classifying. What is classifying? It means grouping the transactions of one nature. For this, a separate book is prepared called ledger. What does it mean? First point, classifying means grouping of transactions of one nature. For this, a separate book is prepared called as ledgers. This is a separate book. For ledger, see, I have given an example. All electricity bills recorded under one heading. Means in that ledger, I will prepare a column called electricity bill. So in the whole year, I paid the bill 12 times. All the 12 transactions will be seen in that. For an example, Abhidanshu account, whatever the transaction I have done with you, Abhidanshu, will be seen in that Abhidanshu's ledger. I will not hunt here and there. I know this is the ledger of Abhidanshu. In that I will have a date column. He took money from this time, he paid back. He took again, he paid back. From that ledger, I can identify the transactions of that particular person. Not day wise, but for the whole year. The last part, summarizing. What is summarizing? Presenting classified data in an understandable and useful manner to the management and other users. That is just to summarize the record in a very short form called as profit and loss, balance sheet. They summarize. If you say we have summarizing in three forms: trading account, profit and loss, and balance sheet. When we summarize, it involves totaling and balancing of all ledger accounts and preparing trading, comma, profit and loss account and balance sheet. Okay, this is preparing balance sheet. And lastly, it records financial position of the company. It gives a complete idea about financial position, that whether the company is a profitable company. In this, you remember my today's virtual class, inter comparison or intra comparison. You can compare yourself with the last records or compare yourself with the similar company. When you compare with similar company, inter comparison. When you compare with your own last year records, it becomes intra comparison. And last is interpretation. Interpretation basically refers to the users. I haven't mentioned it. This you should prepare from the textbook which I have shared with you online. Interpretation basically refers to the users. What type of users you are going to share the information, and even have the help page in decision making. Interpretation, to interpret next year what changes are required in the particular business. Thank you, students. Done.